Hello and welcome to This Week in Housing. My name is Sarah Eggleston. I'm with John L. Scott and I'm here to deliver the weekly real estate news for our region. Go ahead and jump right on into it here. Get my screen shared. All right. So as I said before, this is This Week in Housing. And it is Blue Friday. So you can see I have my colors on again. Go Hawks. Last week, the Giants took away the win, unfortunately, but it was a very close game. But we have another chance against the Jets this coming Sunday at 1:05 p.m. Pacific time. So I'll be tuning in on Sunday afternoon, and I hope you will be too. All right. So as far as news, the COVID-19 real estate restrictions have been, well, all the restrictions have been extended. They were updated on December 8th and extended through January 4th. So as far as real estate is concerned, this means no in-person open houses. Brokers must work from home when possible, and real estate offices must be closed to the general public and limited to 25% capacity. So there are no in-office meetings right now. Any client meetings between a client and a broker need to take place either digitally or over at the client's house, or they just can't take place at the office at this point in time. And this is not new, but in-person activities must be by appointment only. Face coverings are required by brokers, their clients, and industry partners. And no more than 5 people in addition to the broker on site at any one time. And the people that are on site must remain 6 feet apart at all times. So this came out yesterday in the Seattle Times. Seattle area sales slow down, but crunch intensifies for buyers. This is kind of what we've been talking about over the whole year. This article gets into the lack of inventory that is available to the buyers. New listings of homes for sale fell 43% last month in King County compared to October, according to data released Monday by the Northwest Multiple Listing Service. The number of new listings was down 44% in Snohomish County and 35% in Pierce County. So these winter slowdowns, it's something we kind of expect to see every year. But as it says here, in recent years, new listings in the region have dropped from June to December and picked up again in the spring, peaking in May. But the pandemic scrambled the market this year. New listings climbed in June and July, though they were below 2018 and 2019 levels. And yeah, we're just so far below the inventory that we would normally have this time of year that the buyers are having a hard time finding something that works for them. So this is these are a couple images from that article, and you can see that over the past year, home prices have increased in all of the 4 Puget Sound area counties, and some by quite a lot. You can see a huge portion of the region here is in red. Downtown Seattle is a little bit less intense of a market than the outlying areas, but we're up over 12% in a great number of the areas in our region. So that is great news for home sellers and home buyers. Unfortunately, it is making the super low interest rates kind of a wash because you were paying about the same for a home last year, as far as balancing out the mortgage rates and the home value. And yeah, it's pretty intense, but that isn't true across the board. So here you can see November home sales and November condo sales in King County, and you can certainly see that they look very different across the board. Ooh, come on. And as far as mortgage rates are concerned, last week we did hit our 14th low of the year. And if we come up to this week, it is flat. There's no change. So we're still hanging out at that 2.71. And for contrast, we were at 3.73 a year ago. So we're down over a percentage point from 1 year ago. And that has really been driving a lot of demand for home buyers and refinances. So this came out of the National Association of Realtors yesterday. This is their instant reaction to the mortgage rates. And these ultra low mortgage rates make home buying more attractive, boosting activity to the highest level since 2006. In the meantime, inventory hits all-time lows. The rising imbalance between demand and supply for housing is putting upward pressure on home prices. Home prices rose 16% in August compared to a year earlier, keeping in mind this is national. However, wages rose 9% during that same period. Thus, home prices are growing nearly twice as fast as wages in terms of percentage change. So this information is, I think, not very surprising as far as wages not keeping up with the increase in home prices, because that supply and demand has really been what's driving up those home values. And wages, that I'm not an economist, but I feel like wages is a really hard thing to track right now with so many people on unemployment or limited employment. So that part of it is a little bit, wages rose 9% when so many people are out of work. But yeah, so I really think there's a lot more to that number than is shown in this article here. It just brought up a lot of questions for me overall. But home prices rose 16% compared to a year earlier. Monthly mortgage payments for a 30-year fixed rate increased by $10. In contrast, the typical American earns $380 more than a year earlier, thus expecting home buying activity to remain strong in 2021. So I feel like this article doesn't articulate the difference in like exactly what's happening in our economy, because we're kind of in a K economy right now. The people on the upper half of that K are doing really well, and the people on the lower half of the K, those in the service industry, the food service, hospitality, they're not doing very well right now. It's so I feel like looking at these numbers as an average of the overall society doesn't quite tell the full tale of what's going on right now, but I did think it was important to touch on. They also had this little infographic as far as home price growth going up 16% compared to a year earlier, and wage growth going up 9% compared to a year earlier. So if we bring everything back local to our area and look at King County, we had 464 new listings, 849 pending, and 748 sold. So if we look at that on the graph, you can certainly see that we are heading down as far as number of sales, new listings, and this is generally what we would expect to see this type of year. However, that new pending jumping up, the home buyers, the buyer demand out there is still so strong, and there's just not the inventory to satisfy them. So I really don't think that, like, I think we'll see fewer pendings because there's fewer homes on the market, but I really feel like the intensity is going to remain pretty hot through this winter, especially compared to previous years. And if we look at buyer, this is showing data for North America, and this is a good indication of buyer demand because these are people looking at homes. And you can certainly see that we had that big dip for the Thanksgiving time, and now we peaked back up, and now we're starting to trail off again. And we probably will see fewer showings until the end of the year, and that'll peak up again in January, February. I think it'll pop up earlier than normal this coming year because of the pent-up demand. So this, I wanted to show you these monthly data graphs because I think this really does show the difference of what's going on between single family homes and condos. So this graph is for single family homes. The light green is for sale, the dark green is sold, and the red line is pended. So you can see that we have a lot more sold than pended ever since July. If we pop over and look at the condo statistics, the amount of condos on the coming to the market has increased over that same period of time, and the people buying the condos is significantly less. So there really is a tale of two markets going on right now. There's the single family residential and condo units, and we're seeing a flock of people moving from condos to single family homes, moving from Seattle out to the suburbs, and because of remote work. A lot of this is due to the remote work. Amazon has extended their work from home timeline. A lot of companies are saying this might be permanent. You might come into the office 1 or 2 days a week. So people are moving further out because they're comfortable with, if I have to commute 1 or 2 days a week, I can deal with the traffic going into the city. They're not going in 5 days a week anymore, so they don't have to be right by the office. And this is months of inventory for single family homes. We are currently at we have an inventory of 0.7 right now. So if no homes came on the market, we would theoretically run out of inventory in 0.7 months. But if we look over at condos, we have 2 months supply of condos. This is still a seller's market. A balanced market would be when we hit about 3 to 4 months of inventory on the market. That would be a balanced buyers and sellers market. So we're still in a seller's market, but you can certainly see the difference of the availability between single family homes and condos. So if you are looking for a condo right now, it might be the time to pounce. So if you do have any questions, please feel free to let me know. I'm always happy to chat about real estate. I really love what I do and love helping others. So if there's something you're curious about, please feel free to reach out. I am here to support you and provide any information you may need. Well, thank you so much for joining me for This Week in Housing. I will be back here next week, Friday at 3 p.m., and I hope to see you then. Have a fantastic week and go Hawks!